We're buying it because it's core to us. This is our core business, is leasing airplanes. And what we're doing here is we are creating the aviation leasing industry leader across aircraft leasing, engine leasing, rotor aircraft leasing on a global basis. We're buying the right business at the right time for the right price, and we got a great partner in GE. That's why we're doing it.
Just on the timing, how do you know now is the right time? We are still in the tail end of a vicious pandemic which has taken planes out of the sky for the last 12 months. We really don't at this point have a good idea of when those planes are going to be back to pre-pandemic business. Could you have done this deal in 6 months' time for the same price or even less?
No, definitely not. We've been looking at this for well over a year. We did something very similar in the financial crisis when we bought AIG's aircraft leasing business, and that powered AerCap to the #1 in the world. And we did that at the end of 2013, start of 2014. It's the same playbook here. What we looked at very carefully is what's happening on a global basis over the last 12 months. So the first thing we wanted to see was, after the pandemic started, what did that mean for consumer demand? Was there a structural change? Were people going to travel as much as they had before? Had their appetite to travel changed? And resoundingly, the answer was no on a global basis. We looked all across the world. I'll give you one example. In Europe, we hit rock bottom on April 12. We had 2,099 flights that day. Within 9 weeks, we were back to over 18,000 flights a day. Now, Europe was then hit with the second and third waves, but we saw that consumer behavior. We saw the exact same in China. In the US, on the 14th of April, we bottomed at 89,000 passengers. Now we're back nearly every day to over 1.1 million. So the consumer demand is there. Very importantly, then we looked, can the consumer afford to fly? On the far side of this, do they have the disposable income? And you see that the savings are at all-time highs. Then we're saying, what about AerCap ourselves? We're already the biggest owner of airplanes. Financially, how strong are we? And we came into this with the lowest leverage we've ever had, the greatest amount of liquidity we've ever had, and we've had tremendous success in the bond market, and we maintained all our investment grade ratings. And we found then a business that at the right price and with the characteristics that we wanted, and one that had been run very well for the last 20 plus years. So we put all those things together and said, look, yeah, and the vaccine's coming. Now, everybody wants it tomorrow, but there's no doubt that it's going to be here. This transaction will take 6 to 9 months to close anyway. And so when we look forward, given the vaccine, given our own financial position, and the once-in-a-lifetime opportunity to create the leader on a global basis across all of aviation leasing, and it's our core business. It was a great opportunity.
Aengus, I can feel the ESP between us, because I knew you were going to preempt my question about your balance sheet as well, because you mentioned your leverage as well. You have an enormous amount of debt even before this deal, sir. You have a net debt to EBITDA ratio of 11.2. You have a market cap of $7.4 billion, but circa $30 billion worth of debt before this deal. You are a highly indebted company making a bet on global recovery, aren't you, sir?
Well, you've got to look at it. It's an asset-intensive business. So you look at us, our equity position versus many financial services business, you'll see that we are quite conservatively levered. And that's why we were investment grade rating across the board from all agencies before and after this deal. Our leverage was 2.6, 2.7 to 1 on a debt equity basis. In a highly capital intensive business like ours, that's the crucial leverage ratio. This will take us to 3 to 1, still inside the investment grade ratings, and we have a strong track record of delevering. I mean, to give you an example, we issued a 5-year unsecured dollar bond a few weeks ago at 1.75%.
Yeah, I mean, that is quite extraordinary. But Aengus, Aengus, I beg your pardon, is that more an indictment of crazy markets stimulated by central bank policy, which has made all kinds of, dare I say it, financially secure bets in all kinds of markets as well? I mean, are you worried about the refinancing of your debt going forward? I mean, your liabilities due are $2.47 billion this year, liabilities of $33 billion falling due after that. And that was even before this deal, sir.
Well, they're very long dated liabilities. Some of them go out 60 years. So what you're looking at is what's your maturity profile versus your cash flow profile. And what you'll see is that if you look at the average duration of our debt, it's quite long, and it matches the average duration of our leases, which is the average duration of our cash flows. So as we look forward, when we put debt into place, and we've been doing it for a very long time, you'll see that it's a very long dated capital structure that we have. You don't put pressure on the business. And when we entered into this transaction with GE, of course, we had the $24 billion of funding in place to execute the transaction.
Can I ask you about the market power that you have now on the back of this deal? Some compare this to, say, a potential merger of an Airbus and Boeing. That's how dominant a position you will have in the leasing market. What does that mean in terms of your ability to negotiate prices? Because we know over Boeing there's been a few problems in recent years around aircraft. This is a very challenging market from a COVID travel perspective. What sort of pressure can you apply on the aircraft makers to drive down the price when you're purchasing aircraft?
Look, we already were the biggest owner of commercial aircraft in the world. We have and continue, and we will have very strong relationships with Boeing and Airbus and all the engine manufacturers as well. But as we look forward, this company going forward, we think it'll be a partner to Boeing and Airbus as we look to develop new aircraft. We give them our input, what we see in the market. But vitally for airlines, you got to step back, guys, and say, okay, look at the airline industry. We're going to come out of this with similar leverage, give or take, to what we went into it. The airline business just doesn't have that capability anymore. The airlines had to take on a lot of leverage, our government subsidies, our government support. And when they get to the far side of the pandemic, as they want to improve the environmental nature of their fleets, they're just not going to have the capital to do it. They're going to want to come to people like us who can help them to improve the quality of their fleets. And that's something that's going to be driven as we go forward, that the airlines themselves will not be in a position probably to make their fleets as environmentally friendly as possible. And they'll need to come to the big leasing companies to do that. And there's plenty of competition out there for us.
Can I ask you some practicalities around planning for the type of demand that you're witnessing? Because there was a story recently that some of the airlines had pivoted towards different types of routes at this point where they can still access the market where there's no quarantines, for instance. They've really peeled away from those commuter routes from, say, London to New York, where business travel has been very hit at this point. But then down the track, when we see restrictions change and vaccines rolled out more aggressively, those trends could also be altered in future. So how do you plan and how do you remain flexible around the type of aircraft that some of the airlines may want in future?
And that's you're absolutely right there. You want to make sure you have a fleet of aircraft that the customer wants for the long term. And that was very important in looking at this acquisition. And the airplanes that are going to be in demand are the narrow body airplanes at the moment that have significant demand. And that was very important in this transaction. The GE subsidiary, GECAS, has a very heavy focus on the narrow body aircraft because the initial stages of the recovery are occurring more in the short haul market, domestic US, domestic China, and it was, we might say, domestic Europe, as it were. And I do think over the summer, we're going to see significant progress in intra-European flying. And that will be focused on those more narrow body airplanes, the Airbus A320 family, the Boeing 737 family. But there's no doubt that international travel will start to open. You see some travel corridors now, but by far the most important long haul market in the world is the one you touched on, the North Atlantic. And I'd be hopeful that we'll see some movement on that between at least the UK and the US in the near future. And that'll then be the benchmark for the rest of the world going forward, and it'll open up.